So recently we've been getting a question a lot, and that question has been, what if I miss out on my entry point, or what if I miss out on my favorite zone for that particular crypto, stock, or of course commodity? Well, the good news is there's always another opportunity around the corner, and we'll be taking a look at a whole bunch of those now that we've seen the volatility come out of the market and the bulls regain across both the crypto markets, the stock markets, and of course the commodities markets. There's heaps going on right now, and this video is sure to be a good one. Stay tuned, everybody. See you very soon. Alright, well here begins our analysis for the markets closed 8th of December 2021. In today's video, as we mentioned, we'll be going through the crypto markets, we'll be going through the commodities markets, stock markets, and everything else. But we'll start here with the stock markets, and this is the large companies, the S&P 500 large companies. Apple continues to be a stellar performer, 2.28%, all-time highs, massive movements here for that stock. Tesla also 1.64, coming off another really good green day. And PayPal finally showing some accumulation base and breaking through that accumulation, hopefully some movement up. Disney, another one that we're watching closely on the channel at this stage. But let's move over to the markets in general. What was happening on the major indices? So IWM was the best performer. That's the Russell 2000. We will look at this chart later on, 0.68% up for the session. Nasdaq was 0.42%. S&P 500 0.31, and the Dow Jones lagging a little behind after what really was the outperforming market there with a 0.1%. When we have a look at the sectors though, this is where things get a little bit more interesting. First time in a while, we've seen Wall Street picking up very specific sectors, and these are actually underperforming sectors over the year. Now, I'm going to ask the question right now for you to put in the comments down below. What do you think the number one and number two best performing sectors for 2021 in the stock market have been out of the majors that we've got here on the charts? Can you guess it? Put it in the comments, pause the video, and let's see if you're correct. I think you'll be quite surprised which are the top two performing so far. We've got IBB, the biotech, up 1.13%, and XLC and XLV, healthcare and communications, all up. Now, these are interesting because I think there's a sector rotation that could go on here in these sectors moving forward through to 2022. And this is due to a general lack of performance through the 2021 period. Everything else was down, including the defensives, the XLU and XLP, the consumer staples, and the utilities were both down. And this tends to lead to that kind of area where we say, okay, risk on is clearly evident here in the markets. But let's see if everybody was correct. That's right, energy is the number one performing sector in the market this year, 56.12% up. And then real estate, actually XLRE, the REITs, they've been up 38.6%, just slightly beating financials and XLK. And I'd be very surprised if anyone got the second one. REITs are not something, or real estate is not something that most people think is synonymous with outperformance in the market, but it certainly was for 2021. And I think this brings us to a point where we want to discuss what's underperforming. Well, we've got biotech. Biotech had its run. It did well for a period this year, and then it is significantly underperformed near the end of this year. Look at this, only up 0.96% on the year so far. XLC, another underperformer, and same with healthcare. Now, these particular sectors tend to do well in mid-cycle. So if we believe we started a new cycle at the pandemic start, then we're starting to get into this period where these could be the stories of 2022. And I think this is something that a lot of people don't consider. We'll be following it on the channel as much as possible. We'll be following these sector rotations. And if you're interested in that type of stuff, please remember to subscribe, smash that like button, because we always try to bring you this type of content. Thinking outside the box is something you really want to do. And you want to be looking at something before the rest of the market starts to get into it. And as it breaks out, e.g. over here for energy, that's when you want to be entering. You want to enter that participation phase, not during the sideways action, but the participation itself. Let's get into the technical analysis here, and we'll start off with the VIX. This is often known as the fear index. It's basically the options prices on the S&P 500 in terms of puts. And you'll notice that it's come straight back down. Now, we always expect this with the VIX. It's usually very pumpy and very dumpy because fear does come out of the market. We know over time VIX cannot stay at above 30 or above 40 for a long period of time. It's almost an assured thing. Now, that doesn't mean that's an easy trade because it's very expensive on the roll on the VIX, so you've got to be careful there. and it's come back down underneath 20. So we're actually trading at 19.89. And many of you will know underneath 20 is a big deal. It brings back swing traders. It brings back less volatility, more technical analysis. And of course, we also have less of that kind of 2%, 3% drops and crashes and all of those types of things. So I think it's good news for the market, especially if you're in it from a technical perspective. Let's move over to gold, often seen as a hedge against uncertainty. I don't believe it really is that much, but it often is seen to be this kind of thing. And gold has dropped down significantly recently. It had that run, then it smashed straight back down. It's in consolidation right now. We've made a lot of mentions this week about the 1810. And look, 1810 remains the key level. There are a whole bunch of reasons why, but I'll just bring you to the daily to really show you the big issues that gold has. So here is gold on the daily. You'll notice that it has a 50 exponential moving average, a 20 exponential moving average being the red one, and a 200 simple moving average. It's very difficult for it to push through this easily, but if it gets above, it gets through 1810, which is the previous resistance wicks, then all of a sudden we start that December into January, hopefully bull run that we usually see on gold. And that's a usual thing. If we go back through the previous years, December into January has tended to be quite positive. Here's the November into December period. You can see December and it moves into Jan, and then of course it sells off. So we're looking for that rally, and the rally happened in all the other previous years up till 17. So look, we'll keep watching it. Nothing for now. If you're trying to short it, fair enough. I mean, there are a lot of reasons why it might short, but I think it's all a little bit too clean for the short side. So I'm neutral to it, to bullish if it does the right things. And that's the beauty of price action and trading. You don't have to do anything unless it shows you what you want to see. Let's move over to silver, another one that's showing some form of accumulation base. We've got a lot of wick purchasing here, showing that people are interested in silver at this price. Previous support over here is becoming support again on this side, and we have a nice resistance around that $22.60. So we'll be watching that zone very closely on the smaller time frames, looking for a closure above this, and hopefully that's going to signal not only is gold moving, but silver is also moving up. Nice base here on the smaller time frames to have a look at for your systems. Let's move over to US oil. This one's been the gift that keeps on giving. I think that oil has been almost one of the standout trades where you can see that it's been amazing in the markets, but it's also been amazing just in a Brent or US oil trading. The TA has been phenomenal, and you guys, or together, we have been following this so well. I really want to give you all a pat in the back because it's been very, very fantastic from a technical standpoint. Look, we had the base formation, the max pain over here. If you're not sure what max pain is, definitely subscribe because we talk about this theory all the time. Basically, it knocks out a lot of stop losses, creates that liquidity for Wall Street or bigger traders to get in. They quickly push it back, and then it's created an accumulation base with a nice breach. This breach, with everything on the left-hand side, creates an amazing storyline towards the bull side. It quickly repriced up to this 72.89, and at this stage, we're just hoping that we can close above here, because if we close above here, next stop around that 75. Still good gains here to be had in oil should it breach through. And you'll notice the market has tried a few times, but constantly been rejected. Long leg doji, rejection candle. Do we get through? What a fantastic signal that would be. And we'll keep watching US oil and Brent for this type of reason. Let's move over to Tesla now. Now, Tesla and the stock market. Tesla's actually been, I wouldn't say fantastic compared to some other stocks in recent times, e.g. Roku yesterday was up huge, and that had some good news coming out. I think there was a deal maybe with Google or something like that. But in general, Tesla's been a pretty good day trade for a lot of people. We had that nice 1,000 base. We saw that bullish hammer. It gapped above. It's moved through again. It's sitting on the 20 moving average daily, which is a little bit of a pain for it. If it gets through there, then where's the next stop for it? You would think it's around that 1170 area, previous resistance. So there could be some nice ramp here on Tesla, and we kind of really maintain the same concept. It's still in a sideways market, and it hasn't broken through to a new peak or anything, and this is very traditional for the Tesla market. Big ramp, sideways for a while, makes a decision where it wants to go, and then it starts its big ramp again. And when it's explosive, but the rest of the time you're just sitting in holding patterns. And that's where I guess we feel at this stage Tesla is. It's repriced itself amazingly. It's held up great during this recent kind of, I guess you would say, fall from the markets, and it's showing that 1,000 base is such a big deal. So if you're a bear on this one, it's all about getting underneath that 1,000 with the daily close. If you're a bull, get above the 20 and hopefully see some day traders pick it up. I think that'll be some cool zones to look at. Let's move over to some underappreciated sectors. Now, before we mentioned that we had XLC communications, that we also had some other sectors like biotech and healthcare that are semi underperforming. But what about this sector? This is for ARKF. Now, the ARKF is Fintech innovation. Now, I know obviously it's not technically a sector, but it just illustrates what's happened to the Fintech space recently. It was all looking so good, and then it wasn't. And it actually fell off to prices that were as low as previously September 2020. So people think that sometimes the market's getting away from them. Yes, in certain stocks it may have. If you were a big fan of the FANG, then of course they haven't come back. Though things like Metaverse or Facebook or whatever you want to call it hasn't exactly performed well, and neither has Amazon for a while. But yeah, ARKF, it's come straight back down. And while we're not seeing lows like over here, we're certainly not seeing the obscene highs that we had before. And this is an interesting point because while I don't like using technical analysis here, we technically are at previous support, acting at a bit of resistance, and a lot of the stocks inside of this fund, things like PayPal, Square, even like other ones in the financial space, MasterCard, Visa, anything around that kind of idea of fintech has been punished. And that's one of those markets where it's down considerably. So there is advantages to looking at the hypers right now. I think that you've got a lot of opportunity in some of those stocks should you be willing to take the risk, and do you like them? I mean, DocuSign recently dropped 40%. Not a huge fan of that stock, but it certainly did. We had Roku's been down for a while. Twilio has been down for a long time as well. DKNG's been down for a long time. They're not all fintech, but you know what I mean. The hyper stocks, all those retail favorites back in Feb, March, are now significantly cheaper than where they have been. Let's move over to Apple. This is certainly not significantly cheaper than where it has been. Apple is on a ramp right now. It's really moving hard. And from a PE ratio, it's been higher, even with its current earnings. But I have a suspicion that there's a few things going on here with Apple, and I think it has to do with the options market. The options have been allowed to flow through. So let's take a look at the options here for a couple of expirations. Oh, we need to go to the other one first. So we'll use this one first. This is the 10th of December. And what you'll notice is there's a lot of puts here. So as it's been going up, people have actually been loading puts on all of these previous call positions. And remember, we talk about Apple being notoriously very strong on the call side due to retail loving buying calls on it, and rightfully so. But look at where this week's big strike is. It's actually sitting at about 170. Now, is this signaling that we might have a small pullback in the market before we go higher into the Santa rally? Remember, we've just run incredibly well so far this week. Will Thursday and Friday sessions have a little bit of a fall to close Apple around that 170? A very interesting zone. Now, I don't think it goes lower than that because you'll notice here there's a lot of puts sitting there, and even the puts are starting to rise on the 170 strike. But that's something that I was looking at, and I noticed that this is an incredibly outlier percentage point here. This 170 is really showing us a strike that's pretty amazing. Then we go to the next week. Now, whenever you have puts and calls equaling each other, you can't really consider that as an important kind of level because it's really neutralizing each other. You know, we know that 70% of options might expire worthless, but we've got the puts and calls sitting on top of each other. We have that for this strike. We have that for this strike. We almost have it for this strike, and I'm sure if the market pulled down, it would be there. So does this allow more free flow bullishness after this week for Apple? It's certainly big potential there. What we're looking at is really an idea of maybe Wall Street might want to pull Apple back down, get it underneath that 170, then close it, and then of course allow it to ramp into the Santa rally and all those types of things. We'll be taking a lot more looks at Apple, especially over our weekend videos as we get more information coming in from these calls. We also want to see how it reacts on Friday. Does it get underneath 170? Let's see what you think in the comments down below. Pretty important zone. There's not much technicals you can go off here. It's just the idea of the option showing that really big level on the 170 here with way more calls than puts. And Wall Street do love to make money, so that would be a fantastic place for them to close it, wouldn't it? Let's move over to IWM. IWM 225 here. It's moved up. We've got that double bottom base off the 212. We've breached that zone. We've moved up. A few people have mentioned all the moving averages that we're hitting. So we're hitting a daily 20 moving average here. You can see it's kind of like gold. It has to do a bit of work to get through. But look, we've got a gap fill that goes up to this area up here, up to the 230. And if we keep going, as we've mentioned several times, this market technically is the least performing for the year. I mean, look at where 2021 is. 2021 started 15th of Jan. We're sitting on 212. And currently we had 212 just recently, and we're sitting about 226. So compared to the S&P 500 and the Nasdaq, it really isn't fantastic. It's shown us base. I wouldn't mind if it pulled back around and then came back and hit us at 220 again, allowing a lot more buyers in. But I do think you're going to have a lot of bulls here. So if you're a bear in this market, it's hard to see how the market could go underneath this zone without finding some buying pressure. I think that's the problem for the bears right now. Maybe they're going to have to stay in hibernation until the January, February time cycle, the seasonality that ends or starts around there. That'll be really the story that we talk about. 230 will be the big breakout that we're looking for moving forward. We're looking for that gap fill, and I still think IWM looks okay on these charts. Let's move over to the Nasdaq, the QQQ here, and we'll have a quick look at it. So the Nasdaq continues to bounce up. It's basically at a point of almost resistance now. Again, if this happens, let's say we hit it on Thursday session and then we start selling off, again, it would make sense to that Apple. Get Apple underneath 170. It's a big part of the Nasdaq, as we know, and maybe just roll it back down to maybe the 20 moving average. That could be where a pullback occurs. Are we still bullish for new all-time highs? I would say so. I think it makes sense when we look at our S&P 500 analysis soon. But yeah, we're about to hit a big resistance, and you know where it is. It's that 16,450 zone. Resistance, resistance, resistance across the board on this one. We'll come back to it very, very soon, but that's our thought process. Maybe a little bit of resistance here, a little bit of pullback, and then we continue on that rally. So for many traders that are already into the long side, they're feeling pretty good about the world. Let's move over to the SPY at this point. Now, we've mentioned several times when you get pullbacks to the 38.2 and 50 fib, that's something you want to look at. We know there was a weekly 20 there as well. That's a huge, huge zone. I'll just show you guys so you can see how good the weekly is if you haven't been following the channel for a long time. And we have here support, 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 support. So it's been our go-to when we're looking at buying the dip or we're looking at these technical levels to watch. We had the double bottom on the 2 hour. It was a phenomenal entry, and it's continued to ramp up due to the news as well. And again, the story is currently we're at a point of resistance. So if we put a horizontal line right on the SPY, right around this 471, 472, we had previous topping areas. It may breach through, but I think with a rally like this, it tends to fall back. Now, where should it fall back to? Well, it would make sense to come back again to a moving average. Maybe the 20 moving average, this 462. What about if we had like this? Bam, bam. Wouldn't that be fantastic? A great, big, nice pullback, nice swing as the VIX kind of drops off a little bit here as well. That's something we'll be looking at. Let's look at the SPX and get an idea of what's going on from a pivot-based perspective. So the reason why I think all these things make sense is partly due to where the pivots opened for December. And we're already at the R1. So the R1's right here. But look where the R2 is. A lot of people are mentioning 4,800 by the year end. Makes sense. You know, 4,800, we hit this, and R2 is not often belted through easily. Look over here. The R2 barely almost reached, didn't quite reach it. And then it stops right on that point and sells off. The R1 here, we mentioned that several times over the last couple of months. And if you go back through the central pivots, there's an R2, hits and sells off. So the R2 is probably going to cap us. That's going to be where we're seeing that resistance topping. Now, if you think from now to Christmas, 2.32%, a lot of people wouldn't get excited by that. I don't mind because I think there's other opportunities in other sectors. But yeah, to make this kind of the reality, let's say what would be best to do. Maybe push it back down and then push it back up, close it here, and then of course, we'll see what happens in Jan and Feb. But it's certainly an interesting scenario, and I think 4,800 makes sense for the market to reach sometime, hopefully, through the December rally period. It's interesting stuff. Look for the 20 moving average. If we do get pulled back somewhere around this previous support over here, this 4,625 or 4,600 area, is going to hopefully be met by bullish players, and that's the problem for the bears. How do they push it through these areas when there are going to be a lot of bulls looking at picking up even this last run? They're going to be drawing fibs all over this, guys, and really trying to figure out the key level. It'll be an interesting zone for us to look at. All right, let's move over to Bitcoin. And of course, Bitcoin shorts continues to come down. That's a great sign for Bitcoin hodlers. Whenever we see these larger shorts come through, as in they remove their shorts, the big whales, that's good news. Whenever they ramp, we have to be careful. It did end up, I believe, creating the flash crash that happened on the weekend. Usually whales are behind those types of weekend moves, though some people would probably disagree. This is something that you want to bring into your chart analysis. So BTC USD shorts on the Bitfinex exchange, they're known to be on this, and we've seen it before on the left-hand side as well. So as that drops, that's a fantastic thing. Let's move over here to BTC itself. So we're on the 8-hour chart, and you'll notice that it's doing the right thing, though it got a little bit scary yesterday when it came back down. 8-hour chart's quite a good chart to look at on the markets. You'll notice it did hold back Bitcoin, then we got that closure above. Now we've rallied with a nice kind of wick rejection, huge amounts of buyers coming in here, and we look for this. We need above this zone. Get us above something here, because if we don't, what good is this buying candle showing us? Yes, there's some wicks. Yes, there's a huge wick here. We need some follow through for momentum. So we'd like to get above this 8-hour 20, above this resistance high, and then after that point, the next stop should be somewhere around that 54,000 for Bitcoin. It's certainly exciting. If it can do it, bring some Christmas cheer, and don't get underneath this zone, because if it does, what are you doing? You're basically breaking that initial trend line here that we're starting to form, and I'd actually almost extrapolate that out at this stage to be looking for potential entries in the future. That also could be something that we could do. Ethereum still remains one of the kings here. This is the strongest coin in terms of just holding and not really moving too badly in terms of the big coins. It's gone from 4437. We're looking for a breakout above 48 to really show us that it's on. That's because of the rejections here, and we'll continue to watch Ethereum throughout the week. So guys, I hope you've been enjoying the content so far on the channel. If you have, please remember to subscribe. We've also got some data coming out on Friday for the market. So if we just scroll up here, always be aware of the data. So Friday, CPI, here it is, 8:30 a.m. CPI data is coming out for the US. That may move the markets a little bit, but in general, these are usually blips on the horizon in comparison to the overall story. The overall story comes from the government, comes from the Fed, and any weird black swan events that we see. Remember to subscribe, guys, like the video if you do, and thank you so much for supporting the channel.